The University of Chicago discovered that 24% of crypto traders get their information from social media, which explains the FOMO that new traders exhibit. Those same traders do not practice dollar average investment for Dogecoin. For today's video, we are highlighting 5 Doge cons you should avoid. Here are the Dogecoin investment mistakes. Number 5. Following the herd. Social media and rumors dictate cryptocurrency. Thus, once a newbie reads Dogecoin analysis today, they are convinced they need to do what everyone else is doing. We all receive information about Doge from social media accounts that might not have all the facts. For example, you could be discouraged if we made a video saying Dogecoin will crash in a week, regardless of the source supporting the opinion. Similarly, a group unanimously supporting Dogecoin garnered an investment fad.
Sell, 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 sell.
To illustrate, a group at the University of Chicago published a survey in 2021 where 24% of their respondents confessed to primarily receiving their crypto news from social media. Roughly 26% received their information from crypto exchanges, and 25% said that they used Fidelity, Robinhood, and other trading platforms to gather crypto information. However, posts from social media are not impartial. They might not contain the correct information as company websites and white papers provide. In fact, buying the currency only after it has gone viral means you have bought it at its top, and you will suffer the decline. The opposite of social media influence to buy hot Doge is the social media influence to sell. Later, we will share the best way to decide if Dogecoin is worth selling or holding. Number 4. Too many trades. This error is prevalent for people with little experience with cryptocurrency and investment in general. When they receive a Dogecoin crypto update, they trade it for another meme coin and then sell it for a gaming coin before trading it for another coin. Basically, they rush off social media buzz to trade across the table, hoping to make bigger gains. Despite the possibility of making gains with this method, the exchange fees alone make it a con. In addition, you will definitely exit one token at a loss, compounding the losses in exchange fees until you lose everything you started with. Thus, choose Dogecoin if you believe it is a sustainable choice and stick to it. Note that losses in a cryptocurrency pay off when you hold for a long period. Number 3. Panic selling. Following the herd to buy is the opposite of following the herd to sell. This part is tricky because Dogecoin latest news update could predict a gloomy future for the token. About 55% of experts who spoke to Finder believe the coin will fade out. Other prediction sites are optimistic that as Ethereum's founder is collaborating to create better utility for Dogecoin, it will start showing an upward price movement. Here it makes it challenging to determine whether Doge is dying or going through a bear market awaiting its next bull. Hence, as a risk-averse trader, decide that if you sell your Dogecoin due to a price fall, you will not repurchase it. Since if you sell now and buy again when things pick up, you are the one losing money, regardless of the soaring percentage. Holding Dogecoin for the long term is a decision you should make after reading the website, white papers, and listening to experienced financial advisors.
Great!
Did you hear of the time Solana lost $8 million to a hacker? If you intend to hold Dogecoin for long, it is advisable to keep your crypto in a hardware wallet. We will explain why shortly. Number 2. Investing all at once. Not everyone knows that the dollar cost average is the most prudent way to invest in cryptocurrency. Of course, some are not conversant with the term. Dollar cost average is spreading your investment over several months. For instance, instead of buying $10,000 worth of Doge, purchase $1,000 worth of Doge at a time each month. When you do this, you even out the price fluctuations of the coin.
Perfectly balanced.
Sometimes you will buy the dip, and other times you will buy the rises. Suppose you buy all at once at a high moment of the meme coin, and it immediately starts dipping. Your worst nightmare may befall you during the day. For more of the videos that prevent your worst nightmares in the Doge world, subscribe to this channel. Number 1. Holdings in exchanges. Solana was hacked recently, and over 8,000 wallets lost a combined $8 million. This happened on Binance too. So while it is not a con, crypto investors make this mistake. We keep our coins on exchanges for quick transactions. Trading while your coins are protected on a hardware wallet is not convenient, especially if you are on the go. Nonetheless, all the Dogecoin you are holding should be transferred to your hardware wallet once they reach a significant amount. The significant amount is whatever you cannot afford to lose. Do not be convinced with personal keys because, as in Solana's case, the hacker used the correct keys to sign in. Avalanche founder Emin Gunsirer pointed out the transactions were properly signed, which means the vulnerability could be a supply chain attack that manages to steal users' private keys. Additionally, hardware wallets are inexpensive and better custodians than exchanges and DeFi platforms. More on Dogecoin for beginners. We know you have heard of ways to earn more Doge, but you are going through the wrong websites. We have a video that teaches beginners the best Dogecoin earning websites.